So friends, we are in the topic of valuation under GST, and in the last video we had spoken about section 15, and in this video we are going to talk about the rules. Friends, a quick relook of section 15. What it said, there are mainly two parts. Subsection 1, this is talking about transaction value, and then we have prescribed things, prescribed manner, right? This is about transaction value, and then we had subsection 2 and subsection 3. Subsection 2 is inclusions, and here we have exclusions, right? In the prescribed manner we had subsection 4 and subsection 5. So this is the structure of section 15, and what we are going to talk about now is this part, right? What is the prescribed manner for determination of value for the purpose of GST? And as I mentioned earlier, we have rules, rule number 27 to 35. Okay, and to begin with, I'm giving you the list of rules. So first you remember the list and then you go in details. Okay, so section 15 chart is already there in your notebook, so that's why I have removed that first. Now the list of rules, rule number 27, this is where consideration is not wholly in money. Means some consideration is in the form of money and something other than money, then how the valuation is to be done. Okay, so there is a consideration and there is a money, but money is not the whole consideration. So some consideration other than money is also there. In nutshell, you can say that the money plus the money value of the additional consideration, that should be the value, but this is talking about something much different. Then we have rule number 28, which talks about supplies between distinct and related persons. Supplies between related or distinct persons, but other than agent. Now who is called related? That we have already understood in section 15 when the parties are said to be related. So if they are officers or directors in the business of each other, or they are business partners, or they are principal and agent, employer and employee, controlling, owning another person, being controlled by the same person, controlling the same person, members of the same family. So in total 8 clauses are there. And distinct persons, this is within the meaning of section 25. So it is the same person, or you can say one person having different establishment in different states, or different verticals in the same state. Every such establishment is considered as distinct person for the purpose of section 25. So this is rule number 28. Now rule number 29, this is supplies of goods, and this is received or made through agent. So friends, in this we have specifically mentioned goods. So this rule is only in relation to goods, right? Then we have rule number 30, which is talking about value of supply in relation to based on goods, value based on cost. So cost of production plus 10%, that shall be the value. Then we have rule number 31, which is talking about residual value, residual method. Residual method. So under residual method, the right has been given to the officer to determine the value by some other means, but within the provisions of the act and rules. So these are the main rules, but we have in rule number 32, and that is the value of specific supplies. Value of specific supplies. So this is an option given to the supplier that whether he can do valuation under these rules or he can opt for the system given under rule number 32, but only for specific. This cannot be applied everywhere. Here we'll talk about what is the exchange rate. In case of money exchange, what shall be the value of service? In case of airline booking, what shall be the value of service? In case of insurance, what shall be the value of service? In case of lottery, what shall be the value of service? All that we are going to talk about in 32, but all that is optional. Then rule number 33, this is value of service in case of pure agent. So like rule number 29 is exclusively in relation to goods, this rule is exclusively in relation to services, right? Then rule number 34, this is talking about exchange rate. So except in case of import, wherever the foreign currency is involved, the exchange rate will be the rate given by RBI and determined as per the time of supply. Rule number 35, this is talking about value of supply when it is inclusive of GST. So when the supplies are made inclusive of GST, how to determine the value indirectly, that is a reverse calculation, right? So how to decide. But before we talk about the rules, we need to understand two important definitions, because those are going to be referred in the rules, and one is open market value and another is supply of goods or services of the same kind and quality. So two definitions. So if you are having the text of the rules, go after rule number 35, and those are the two definitions given by way of explanation, and those definitions are relevant for these rules only. Okay, I presume that you have taken the note. Okay, so by chance if you are not taken, I am keeping some of the rules open for you. So now open market value. What is the meaning of open market value? The first thing is full price, full value is in money only, no additional consideration, only price is the sole consideration. Price is the sole consideration. Number 3, parties are not related. And number 4, for supply at the same time. And this is for the supply of the goods or services of the same kind. So open market value means the value which a customer is willing to obtain the supply of same kind of goods or services, where price is the sole consideration and there is no consideration other than money. That is referred as open market value. And here we are talking about goods of same kind, right? So here you can say supply of same kind of goods or services. So when the supply is said to be of the same kind of goods and services, so first of all, this is any other supply of goods or services, but those are closely or substantially resembles, closely or substantially resembles, number A, in characteristic, number B, that is quality, number 3, the quantity, number D, the performance, number E, functionality, then number F, reputation. So if these things match, then we can say that this supply is the supply of the same kind of goods or services. So main is this. So when any other supply of goods and services in which these things are there, so there is a close or substantial resemblance in characteristic or quality and quantity and performance, functionality, reputation. All 6 must be there. So it is not majority of these. All must be there. Then only it will be referred as the supply of the same kind of goods or services. So friends, these 2 definitions are very, very important for understanding the rules, because these terms are commonly used in the rules. So I have given you the list of the rules, and I have given you 2 important definitions which we are going to refer in the rules. So now we are ready to go in the rules. So now coming to rule number 27. And the title of rule number 15 is already known to you now. Just refer the notes which you have taken. That is applicable where the value is not solely or wholly in the form of money. So rule 15, rule 27, I'm sorry. Rule 27, this becomes applicable where consideration is not wholly in money. So consideration not wholly in money. In that case, what shall be the value? So in this rule we have 4 options which are required to be followed in a sequence: A, B, C, D. So first of all, the value has to be under clause A. If it is not possible, then B. If it is A and B both are not possible, then C. And if A, B, C all three are not possible, then only D is relevant. So there is a sequence, right? So we can write here sequence to be followed. And this rule says, first of all, the value of such goods shall be the open market value. The first thing is the value in such case shall be the open market value. Now what is open market value? That we have already defined. So this is the price which a customer is willing to pay, where parties are not related. Price is the sole consideration at the same time when the supply is being made. So that is the open market value. If it is not possible, then only B is there. If this says money, because money is a part consideration, plus money value of additional consideration known at the time of supply. Known at the time of supply. So if the money value of this additional consideration is already known, then the clause B becomes relevant, otherwise this is not. So this is money, because this says consideration not wholly in money, so some component in money is there, right? So that money plus there is additional consideration, so the money value of that additional consideration has to be taken into account, provided that the money value of that additional consideration is known at the time of supply. If this is also not possible, then we go to clause C, and that says if it is not possible to determine the value in clause A as well as B, then the value of supply of goods or services shall be the value of the supply of the like kind of goods and services. So it is value of supply of like kind of goods or services at the same time. So here we have supply of the like kind of goods and services. So when the supply is said to be of the like kind of goods and services, when those are substantially same in terms of quality, in terms of quantity, in terms of reputation, in terms of performance, in terms of functionality, everything is closely resembling, then we will take the value of the supply of that kind of goods. So this is the sequence. If first of all decide the value as per clause A, if it is not possible, then go to clause B. If both are not possible, then only go to clause C, and if that is also not possible, then come to clause D. And D says money plus money value of additional consideration as per rule 30 and 31. This is also in sequence. So how to determine the value of additional consideration? That is given here, because money is already there. How to determine the value of the additional consideration? So first is clause B. If it is already known, that is clause B. If it is not known, then it is then the value of additional consideration is to be decided as per rule number 30 and 31, and those rules are also required to be followed in sequence. This is important. Now one example is quoted in the rule, and that says there is one phone available with exchange of old phone for rupees 20,000, and same phone is available without any exchange for 24,000, right? So this is with exchange. And this is without exchange, right? So now somebody is taking a phone under exchange scheme. He is paying 20,000 rupees plus he is giving the old phone. Then what shall be the open market value? Now open market value is 24,000 rupees, which is saying that if there is no exchange, the same phone is available for 24,000 rupees. So this becomes the open market value. So this is clearly an example of this one. What shall be the value? For other things, examples are not there, but in the material you can certainly find the examples. In the exam, rules are more important, law is more important, so you can give answer based on the knowledge of the subject. So reading number of examples may help you to understand it more, but the base is rules themselves. So this is rule number 27. When it becomes applicable, when consideration is not wholly in money. Okay, so this is rule number 27. Now I'm going to rule number 28, and rule 28 is applicable when supplies are between related parties or distinct persons but other than agent. So rule number 28. Supplies between related parties or distinct persons but excluding agent. Because for agent we have next rule, rule number 29. So this is talking about supplies are between related persons and distinct persons who are related. Definition we have already talked about in section 15. Distinct persons, that is as per section 25. So if the supply is among them or between them, what shall be the value? So here again we have a sequence of options. Sequence of options for valuation, right? So if the value can be determined in option A itself, there is no need to go in option B. So when the value cannot be decided in option A, then only we go to B, and if it is not determinable under option A and option B, then we go to option number C, right? So option A says the value shall be open market value. Open market value. So this is presumed that when the supplies are made between related parties, the relation is going to affect the transaction value adversely. So in that case, what price any other customer is willing to pay for obtaining the same supply under the same conditions for the same quality and quantity, then that is called as open market value. That will be adopted irrespective of what the real transaction value is. So whether there is a transaction value or there is no transaction value doesn't make a difference. The open market value is the first option. Then option B comes if it is not determinable in clause A, then we go to clause B, and this is talking about value of supply of the goods or services of like kind. So same kind of goods and services, what is the market value for those? So this also we have defined earlier. So first is option A, if not then comes option number B. And if it is not possible in B also, then value under rule 30 and 31 in a sequence. Rule 30, this is talking about based on cost, and this is talking about any other reasonable method, but within the framework of the provisions, right? Now this rule further says that if the supply is being made for further supply, right? So here we are talking about the goods are being given by the related party to another person, and the another person is going to make a further supply. So in that case you can say it is for the resale. In that situation, the supplier will have an option to adopt 90% of the value at which the goods or services are going to be resupplied, or at which the recipient is going to supply to his customer. 90% of that can be accepted as a value. So if supply is being made for further supply, first thing is this: if the supply is being made for further supply, the supplier may opt for 90% of value at which recipient makes supplies to his customers. So this is another option given, that if the supply is being made to a related party or to a distinct person for further supply, in that situation the supplier may opt for 90% of the value of resupply as the value of his supply to a related party or to the distinct persons. Now another thing mentioned in rule number 28 is that if the recipient is eligible to avail input tax credit, then whatever is the value shown in the invoice, that is acceptable as a correct value. So that is also a part of rule number 28. So that is subject to that if the recipient is eligible to avail input tax credit. It means if there is no further supply, or rather if it is made for a further supply, right? So whatever value is shown in the invoice, that is also acceptable. Okay, so in this part of video we have taken a summary of section 15. We talked about definitions, and two definitions. We talked about open market value and supply of the like kind of goods and services, then rule number 27 and rule number 28. For the remaining rules we will talk in the next video.